insurance. Federal and state governments regulate group health insurance to protect participants and dependents. Another lesson discusses the group insurance laws of your state. Employee Retirement Income Security Act, ERISA. ERISA is the Federal Employment Retirement Income Security Act. In addition to qualified retirement plans, ERISA regulates group health plans with respect to information disclosure. Enrollees must receive written information about the plan and a summary plan description. Accountability. A fiduciary must be designated for the plan. The fiduciary administers the plan in a financially responsible manner for the best interests of enrollees. Claims procedures and appeals. Written rules specify how claims must be filed and how participants appeal denials of coverage. Appeals processes must be fair and timely. Mental Health Parity and Addiction Equality Act. The Mental Health Parity and Addiction Equality Act, MHPAEA, requires group health insurers to ensure that copayments, deductibles, and limitations on treatment for mental health or substance abuse disorders are not more restrictive than they are for other medical or surgical benefits. The Act applies to employers with more than 50 employees. Age Discrimination in Employment Act. The Age Discrimination in Employment Act, ADEA, prohibits employers from discriminating against those who are at least 40 years old. Regarding group health insurance, the ADEA requires that older workers cannot be denied coverage. An employer can either provide equal benefits to all workers regardless of age, and require older employees to contribute more than younger ones, or reduce the benefits provided to older workers, and keep contribution levels equal for all employees. If they pay the same premium for older employees as younger ones, employers may offer Medicare-eligible employees a separate form of coverage that makes Medicare the primary provider through a Medicare carve-out plan. Pregnancy Discrimination Act. The Pregnancy Discrimination Act prohibits discrimination based on pregnancy, childbirth, or related medical conditions. The Act requires the equal treatment of women experiencing pregnancy, childbirth, or related medical conditions for all employment-related purposes. Women are assured equal treatment for group medical plan benefits. Consequently, plans must cover pregnancy as they would any other medical condition. Women's Health and Cancer Rights Act. The Women's Health and Cancer Rights Act requires most group insurance plans that cover mastectomies to also cover breast reconstruction. Family and Medical Leave Act. The Family and Medical Leave Act, FMLA, gives certain employees up to 12 weeks of unpaid leave each year while protecting their employed status. Employees can take leave for family or medical reasons without losing their right to group health coverage and benefits. Employers with 50 or more employees are subject to FMLA. They must allow eligible employees up to 12 weeks of unpaid leave each year for birth of the employee's child, placement of a child with the employee for adoption or foster care, care of the employee's parent, spouse, or child with a serious health condition, employee's serious health condition that keeps the employee from working, sudden qualifying necessity arising from a family member being on active military duty, or being called to active duty, in the National Guard or Reserves. Employees who have family members in military service are also entitled to 26 weeks of leave within a 12-month period to care for a service member who is seriously ill or injured from active military duty. These 26 weeks are added to the 12 weeks provided under FMLA. Consolidated Omnibus Budget Reconciliation Act, COBRA. The Consolidated Omnibus Budget Reconciliation Act, COBRA, protects those who are no longer covered by an employer's health insurance plan or its benefits. Under COBRA, participants in group plans who voluntarily leave their jobs or are terminated for reasons other than gross misconduct can continue group insurance coverage for up to 18 months. However, they will pay the full premium. This right to continue coverage extends to covered dependents who, because of divorce or death of a participant, would otherwise lose coverage. This coverage may be extended up to 36 months. The younger spouse of a Medicare-eligible participant may continue group coverage under COBRA when the younger spouse is not eligible for Medicare coverage. Please pause the audio and review the table. Under COBRA, participants who continue group coverage pay the entire premium. In addition, The employer can charge up to 2% of the cost to cover its administrative expenses. Continued coverage must provide the same benefits as those provided to the remaining group members. COBRA coverage ends if the participant is eligible for another group plan or fails to pay the premiums. Employers with fewer than 20 employees are exempt from COBRA unless they operate in a state that has additional requirements. Health Insurance Portability and Accountability Act, HIPAA. The Health Insurance Portability and Accountability Act, HIPAA, regulates how entities treat the privacy and security of information about a person's health. HIPAA also ensures that those who have lost their jobs or want to change health insurance carriers will continue to qualify for medical insurance when they go to another job, called portability. HIPAA applies to group insurance plans that cover at least 2 people. HIPAA guarantees that insurers that sell individual health insurance plans must offer them to eligible people who have lost group coverage, regardless of their health. This is called guaranteed issue. To qualify for an individual policy under HIPAA, a person must meet these requirements. The last healthcare coverage must have been under an employer-sponsored group health plan for at least 18 months, creditable coverage. Insurers provide certificates of creditable coverage to people whose group plan benefits are terminated. The certificates indicate how long they were covered under the group plan, and under COBRA. The person must have exhausted all available COBRA coverage. Those who are terminated from a group plan and decline COBRA coverage are not eligible for a guaranteed issue policy. The person is not covered by Medicare or another plan. Once COBRA benefits are exhausted, a person has a limited time in which to buy a guaranteed issue HIPAA policy. HIPAA also regulates enrollment of participants in group health insurance plans. A plan cannot reject coverage of a new member due to health. Nor can it impose a new waiting period if the person fulfilled any such requirement under prior creditable coverage. A participant is given credit for any conditions satisfied under prior creditable coverage. Change of insurers. Group health plans usually provide coverage for 1 year. Then the sponsor may shop for another plan or insurer. HIPAA regulates such plan changes. If an employer changes plans, most plans will carry over to the following year a portion of coinsurance and deductible requirements that an insured employee satisfied in the final few months of the current year, the carryover period. If the employee incurs deductible expenses during the carryover period, they are applied to the new plan, reducing the deductible in the first year of the new plan. No loss/no gain, no loss of coverage. Though employers may change plans, insurers, and benefits, employees cannot lose their right to coverage under the concept of no loss/no gain, also called no loss of coverage. This principle means that employees will neither gain nor lose rights to coverage when an employer changes group health insurance plans or insurers. Key point. When an employer gets a new group health insurance plan or insurer, the new plan or insurer cannot require a covered employee to satisfy a new probationary period or pay a new deductible if the employee already did these under the previous plan. Termination of plan. The employer or the insurer can terminate a group health plan. This might happen when an employer goes out of business or moves outside the insurer's area of operation. An insurer that terminates a plan must usually notify the employer of its intent to discontinue the plan at least 90 days in advance. The insurer must also offer to the employer the option to buy other group health coverage it offers at the time of termination. Any deductible or coinsurance payments a covered employee made under the previous plan are credited to the new plan. Marketing requirements for small employer group health plans. HIPAA regulates how health insurers conduct business in the small employer market. The federal government lets the states define the size of a small employer, which may vary from state to state. Key point. Small employers are usually defined as having 2 to 50 employees. However, some states define a small employer as one having as few as 1 employee. In general, states require the following under HIPAA. Health insurers in the small employer market, as defined by the state, must accept every employer applicant that qualifies for small employer coverage. This is guaranteed issue. Insurance coverage must be guaranteed renewable. The insurer must renew it though it may raise the premium. Renewal is not required if the employer did not pay the premium or moved outside the insurer's service area. When offering coverage to a small employer, A health insurer must disclose the issuer's right to change premium rates and the factors that may bring about a change. Provisions for renewability. Benefits and premiums available under all health insurance coverage for which the employer qualifies. Standard small group health plans. States regulate the standards that small group plans must follow. Typically, a basic plan, often labeled Plan A, is the most limited of the standard plans and only covers hospitalization. Other plans add coverage to the basic plan. Most states also require that an HMO option be among the standard offerings for small groups. Eligible employees. Most states define an eligible employee as one who works for an employer at least 25 hours each week. Employees who are covered by a union's health plan do not need to be covered by the employer's health plan for non-union employees. Employee participation requirement. If the plan is non-contributory, it must cover all eligible employees. If the plan is contributory, at least 75% of an employer's eligible employees must participate in the plan. With a contributory plan, the employer must pay at least 10% of the group medical insurance premium. Limitations on coverage exclusion. The Patient Protection and Affordable Care Act, PPACA or ACA, prohibits health insurance plans from excluding coverage for pre-existing conditions. However, employer group health plans that have been in effect since March 23, 2010, without substantive reductions in coverage or increases in premiums have grandfather status and may retain such exclusions, even when enrolling new participants. Nevertheless, these grandfathered plans can exclude pre-existing conditions only within certain limits. They may not look back more than 6 months at an employee's medical history to identify pre-existing conditions. A medical condition is a pre-existing condition only if it was diagnosed or treated, or treatment was recommended, or prescribed medications were taken for it. Pregnancy is not a pre-existing condition. Covered employees subject to a pre-existing condition limitation can have the limitation period reduced or eliminated if they had prior creditable coverage. Credit for prior coverage lets small employers and their employees change group plans without facing new pre-existing condition limitations. Premium tax credit for small employers. The ACA created the health insurance exchanges, single access portals in every state through which individuals, families, and small businesses and their employees, through the Small Business Health Options Program, or SHOP, can shop for federally compliant health plans. Qualified persons may get federal financial assistance to help pay for their coverage. Consumers who seek health insurance through an exchange can get help from producers and brokers licensed in their state. Employers with 25 or fewer full-time employees may be eligible for a federal premium tax credit if they buy health insurance through the SHOP. Prohibited marketing practices. Prohibitions on unfair marketing practices that apply to the sale of health insurance apply equally to small employer group health insurance. Furthermore, an insurer that sells small employer group health insurance may not require that the small employer also buy another insurance product or service as a condition to being sold a small employer health plan. Domestic partners and civil unions. Federal benefits, such as emergency leave and survivor benefits, are available to domestic partners in civil unions. The U.S. Supreme Court has ruled that states must recognize such unions if they are legal under the laws of any state. For your review. ERISA regulates group health plans to protect plan enrollees. ADEA prohibits employers from discriminating against those who are at least 40 years old. It requires employers to provide equal benefits to older workers, for a higher premium, or slightly reduced benefits to older workers, for an equal premium. The Pregnancy Discrimination Act protects employees insured under group plans from sexual discrimination based on pregnancy, childbirth, or related medical conditions. The Women's Health and Cancer Rights Act requires group plans that cover mastectomies to also cover breast reconstruction. FMLA requires employers to provide employees with 12 weeks of unpaid leave for family and personal medical reasons. Employers with at least 50 employees are subject to FMLA. COBRA allows employees who are terminated for reasons other than gross misconduct to continue group coverage for up to 18 months by paying up to 102% of the premium. HIPAA requires insurance companies that sell individual health insurance plans to offer them to eligible people who have lost their group coverage, regardless of health. It also protects patient privacy of personal health information. The PPACA, ACA, prohibits health insurers from excluding coverage for pre-existing conditions. Please pause the audio and watch the video.
Requirement for qualifying for group medical insurance or group health insurance of any type is the minimum number of employees required. Traditionally, group health plans required a minimum of 10 employees to qualify as group health insurance. That's a requirement that most states, put in their regulations and most insurance companies rely on. This lesson talks about a new market, the small group health market. Now, what's that all about? A key point to keep in mind for your licensing exam is simply this. To qualify for the small group health market, a plan needs it qualifies with as few as 1 or 2 employees, although it can cover up to 50 employees. Now, there are other details associated with the small plan market explained in the lesson, one of which is the fact that policies for the small group market tend to be very standardized in the benefits they provide, and they tend to be somewhat limited, and this is a way for insurance companies to guard against adverse selection. But the key point to remember is a true small group health plan can cover as few as 1 or 2 employees.
Okay, so here is our 4 questions for this lesson. ERISA does not regulate group health insurance plans with respect to claims, procedures, and appeals. Which is not required of health insurers doing business in the small employer unit? Which is not required, by the way. All right, they must accept every employer that qualifies for small employee coverage. I don't know that they have to, but maybe. When offering coverage to a small employer, an insurer must disclose benefits and premiums. That is required when offering coverage to a small employer. An insurer must disclose information. Coverage is guaranteed renewable even if an employer moves outside the insurance. I don't think this one is correct. When does ERISA not require of claims, procedures, and appeals under a group health plan? They must provide written rules for appeals on denials of coverage. Appeals process must be fair. They must provide written rules for filing claims, and the claimants must designate the plan's fiduciary as their representatives. I don't know that they have to designate the plan's fiduciary. That might not be correct. All right, these are a lot of ones that are not correct. So which about HIPAA is not correct? Protects those who lost coverage. It applies to group health insurance plans that cover at least 2 people. It provides a source of insurance to eligible people who have lost employer-sponsored health insurance. It guarantees that employers sell individual health plans must offer them to eligible persons who have lost group coverage, regardless of their health. All right, let's see which ones we got right. And I got half of them right. So the first one here, ERISA does not regulate group health insurance plan with respect to promoting the sponsor's best interest is the correct answer. So if you get this on your test, then you know. This one I got correct. Coverage is guaranteed renewable even if the employer moves outside the insurance service area. That is not required, by the way. That is, all these other things are required, but that is not. They do not have to renew you if you move outside the area. ERISA does not require that claimants designate the plan's fiduciary as a representative. You can pick whoever you want for your fiduciary. Appeal processes must be fair. This last one, the one that is not correct about HIPAA is it protects those who lose coverage under an employee's health insurance plan. The Federal Health Insurance Portability and Accountability Act, which is HIPAA, applies to group health insurance plans that cover at least 2 people. That is correct. It does cover at least 2 people. It applies to group health insurance plans that cover at least 2 people. Okay, that's the end of this lesson. The next one is going to be regulation of group health insurance plans. So if you need help in that area, be sure and stay tuned for that video.